Hi there, trades. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 25th of August. All right, now just having a look at the markets, a little bit of toing and fro. I think we're at the end of the risk-on sort of cycle. That saw, the euro, sterling, Aussie, Kiwi going up the last couple of days and the dollar going down. That small move there on the equity markets today sort of tells me it's pretty much almost run its course. Looking at where the US equities are at the moment, they're a little bit mixed. Hardly changed at all, but we are starting to see the dollar just pick itself up off the floor. Now, most of the next big move, sorry, not the most of it, the next big move will come from Friday's Fed meeting, Jackson Hole Symposium. So, and what we're really wanting to get out of that is whether they're going to start tapering asset purchases or not, right? If they do start tapering, it's a step closer towards raising rates. That's positive for the dollar. If they don't, well, then it's prolonged stimulus, and that's weak for the dollar. So at the moment, we've seen a really good counter rally on the dollar, where the dollar, we've gone from dollar strength to dollar weakness. Kiwi's gone all the way back up to resistance. The dollar itself is blown down through the dollar index, down through support, and it's sort of, it's gone down against the dollar Swiss, but it's pretty much trading sideways, as is dollar yen. And we've seen a huge clean out of the downside here in dollar CAD, with support holding on the bottom there. Now, what do I think from here? Well, we've got US durable goods today in the US. That could give us a bit of a chance to sort of see what's going on here with the dollar. Still, until otherwise, the US fundamentals are strong. What we're seeing is like a long squeeze of dollar positions, okay, where it's just moving to the downside. In this case, euro's going up, sterling's going up, Aussie's going up, Kiwi's going up. Now, they're all set for a big explosive move to the top side if the Fed walk away from the potential tapering situation of their asset purchases. But if it's on, then the US dollar rallies and these all fall. So we're getting close to, well, once we get into Wednesday, if the US durable goods are pretty much in line with expectations, we're going to start to see these things drifting sideways as the market sort of repositions itself ahead of the Fed meeting on Friday. And what that means is we may see, a little move to the top side, bit of toing and froing, but overall sideways movement ahead of that meeting. Now, there are things building in Australia. There's potentially a big truckie strike coming up on the 31st. Now, for those that don't understand, trucks operate the whole country as far as product distribution of food and all sorts of things. So that's going to be a big negative for the Aussie if that sort of kicks in and escalates. As well, just on the Kiwi, I did see there were 62 new cases in New Zealand. That keeps them locked down for this situation. And if that escalates, we should see it go lower. If it clears up, well, then we see the Kiwi bounce, right? So what we're starting to see is independent events, not just in the US, but say Australia, New Zealand. Haven't seen much out of the UK or Europe at this stage. It's more of a dollar move, and we can see how this thing plays out. But right now, we are in the balance. And what I mean by that is come Friday, we started up here. We've seen a low of 116.60. Middle of the range is around 117.80. So I think we're going to have to wait for Friday to see whether we're at 119 or 116 on the euro. That's going to come from the Fed decision. In the lead up to that, I think we're going to see some jostling, a bit of range trading, unless the US durable goods numbers and then the Thursday jobless claims, etc. But to scroll down here, you can sort of see what's coming up. You're looking at this sort of second tier numbers for an idea of what's going on. So we've got some jobless claims and some spending, personal consumption numbers come Friday in the US. These will go some way into determining where the dollar is before the Fed announcements on Friday. So up until then, I think we're going to see a range trade. You're going to see the news services sort of, they're going back and forward with the risk on, risk off profile. Just keep an eye on US equities. If they're up, it's risk on. The dollar block rallies and the dollar falls. If the equities go red and go down, right, well, then we should see the dollar block fall like we are today, and we should see the US dollar rally. right? So we're really in a risk on, risk off profile. So it's pretty easy to follow. Keep an eye on the US equity markets. And during the Asian and European session, keep an eye on the US equity futures, right? That gives us a lead into what's going on. And at the moment, that is rather undecided. Okay, and that's why the currencies are sort of just flipping around here and there. All right, guys, that's it for me. There's not much else more to do. It's you're trying to wait for momentum to come into the market. We've got a little bit of short-term direction, which is dollar weakness. I don't think the dollar weakness is done just for yet. I could see it bouncing back, but it's going to really depend on from here what the US numbers do for us, right? If they're strong, we start to see the dollar bounce. If they're weak, well, then still continues to cruise to the top side, right? And that's where we are at the moment. All right, guys, all the best if you're trading. Cheerio.